Hello, everyone. It's Stephen Whiteside here from theuptrend.com with this weekend's edition of Protect Your Portfolio. Well, week 10 has come and gone, and it was a very volatile week. Now, coming into this weekend, a lot of people are talking about potential crashes, and I understand that. And especially, when you've got a Republican in the White House, the potential of a crash is much higher than if a Democrat's in the White House. Just go back and learn your history about stock market crashes. Now, the market is rolling over right now. So we're going to take those sell signals as they come up, and then we don't have to be worried about talking about a potential crash. If the market's in a downtrend, it's in a downtrend, and we'll just either be in cash or if you're a member of the website, of course, we chart all the bear ETFs, which we can move into once you have a sell signal in a long or bull ETF, you can buy a bear ETF and make money as the market goes down. Now, back when Trump took office, I mentioned that his goals were to increase inflation and to cause a recession. And as we've seen over the past few weeks, those goals are still in place and nothing has changed there. But this time around, it's going to be a lot different. Typically, when a country goes into recession, it relies on a lot of the government institutions to help lessen the blow to the downside. And then when the economy starts to turn back around, those institutions are there to help the economy get back on its feet. A lot of those institutions in the U.S. aren't going to be there this time. And so that tells me that the recession should last longer and be a lot more aggressive to the downside than a typical recession would be. Now, if we think outside of North America, a lot went on this week, starting off with the US dollar index, which collapsed. The US dollar index gave us a weekly sell signal a month ago, and here we are dropping 3.5%, which is a huge move for a currency. People like the Fed do not like to see anything like that happening, but that's what's going on. And it's pretty easy to see that that money left the US and went into Europe. There is the euro up 4.55%. There's the British pound up 2.77%. And not only did the money move into European currencies, it also moved into European stocks. There is the iShares Europe ETF up 5.76%. There's the iShares Germany ETF up 7.6% on the week, making a new high. We also saw money move back into China with the China large cap ETF up 4.91% on the week. So money moving out of North American markets into overseas markets. And here's an interesting divergence. When there's a recession, people stop buying products they don't need and focus on products they do need to survive. Those products are called consumer staples. There's the consumer staples index moving back up to the highs from last year, while the consumer discretionary, those are consumer products that you don't need to survive, coming down 4.76% on the week. So the market is expecting a recession to take place. Again, we don't know when it's going to start, how long it's going to be, but the market is going down right now. We're on sell signals. So as long as we're on sell signals and taking those sell signals, we don't have to worry about a market crash. Now, the currency market is one market we can watch closely. The other one is the bond market. And as you probably know, a lot of the U.S.'s debt is financed by investors overseas. Some of the biggest ones are China and Japan, but certainly countries around the world are heavily invested in U.S. Treasury bonds. And since the U.S. has told all those countries to go away, if those countries reciprocate and decide to sell their U.S. Treasuries, that could certainly hasten the recession and possibly put the country into a depression. So here we are, week one, and we've got a bearish reversal signal on the weekly 30-year bond chart, and we'll just have to wait and see if that turns into anything over time. Now, moving on to the VIX or the fear index, it popped this week, so we are back on a weekly buy signal. We're going to remain long-term bearish on the market unless the VIX closes below 1550 this coming Friday. And of course, if that doesn't happen, that lower channel line will potentially start to move up next week. It may take another week or two, but we'll just have to see what happens to the VIX this week. Now, if you're watching the market on Monday, we'll remain short-term bearish on the market as long as the VIX does not close below 1950 on Monday. And if that doesn't happen, then on Tuesday, that lower channel line is going to continue to move higher. Now, if we go back in time, we've been talking about the divergence between the majority of the stock market and those big cap tech stocks that everybody loves to follow. The iShares for the Russell 2000 have been on a weekly sell signal for 12 weeks now. So the rest of the market was not really participating with the rally that we've seen recently in those big cap tech stocks. Now, back on February 21st, we got a daily sell signal in the NASDAQ 100, which we featured here on the weekend video. And then a week later, we featured the NASDAQ 100 generating a weekly sell signal. So, on a weekly sell signal, of course, you sell at the open on Monday morning, and that would have eliminated the participating in the down move we saw this week, down 3.22%. Now, within the NASDAQ 100, of course, we have those huge big cap tech stocks, and there's 7 in the Magnificent 7 ETF. That ETF was down for its second week on a sell signal, down 4.59% on the week. Now, there's been a lot of the market that has been consumer focused that has not been doing well. And if you look at the retail sector here, we've been on a weekly sell signal for a while now, all through 2025. That's also true for the home builders, home construction stocks. And then we've got the transports moving sharply lower this week. They're down 4.61% on the week. So a lot of the market, already was heading down before this week. Now we've got those big cap tech stocks, and we've got some of them included in the Dow. And the Dow is back on a weekly sell signal. You can see we recently made a lower high, and now we're looking to see if we take out the recent low for the Dow. The S&P 500 is back on a weekly sell signal as of Friday's close. We were trying to get to 625, couldn't make it. Now we're trying to hold 562.50. If that breaks, I'd look for a move down to 500 as our next target to the downside. Now, right now, we're holding the 50-week moving average. The 100-week, the 200-week are certainly targets to the downside. And you can see back in 2022, we certainly got below the 200-week moving average. In 2023, we used the 100-week moving average as support. And it's been a while since we touched the 50-week moving average, but here we are. And we'll have to see if that holds as support. Now, looking at our midterm chart, we have an early warning signal here, but we have not generated a sell signal. So it's going to take another week for long-term money to start to come out of the S&P 500. And you can see that the pros have not given up control just yet. They're heading in that direction. And so we may have to see a sell signal here to actually see the pros give up control next week if the market continues to move lower from here. Looking at the weekly panic zone chart, you can see we're projecting down towards the $500 level, so that would certainly be a reasonable target to the downside if the market wants to continue to move lower from here. Of course, a projection doesn't know what it doesn't know, so things could certainly turn around on Monday, Tuesday, Wednesday, Thursday. Projections are not written in stone. It's just an observation based on current trading patterns, and that's what I would be expecting, a move down to $500 if we break the 562.50 level. Let's walk through some of the other major ETFs that we follow. There's the equal weighted S&P 500 back on a weekly sell signal. There's the equal weighted NASDAQ 100 joining the next generation NASDAQ stocks already on a weekly sell signal. Small caps have been on a sell signal for a while. Micro caps leading the market down over 5% on the week. And of course, when microcaps are leading the major indices lower, that's the risk off trade. And of course, if you want the market to rise, you want those microcap stocks to be leading the market higher in percentage terms. Of course, the market cap, the market weighting of microcap stocks is very, very small. But when investors are excited about the market, then they're willing to take on risk by buying stocks that probably have no profit, probably have no cash. They're living on borrowed money. Those are the riskiest stocks to invest in. And when the market feels good about itself, they'll certainly want to bid those stocks up. Right now, they are selling those stocks aggressively. Now, this week, the biggest loser was the U.S. regional banks, broker dealers, then followed by the U.S. banks themselves. And when we look at the big cap tech stocks, this ranking list has changed. We've got Tesla down at the bottom now. Apple's back at the top. NVIDIA had that spot for a while, so we've had a little bit of movement here. We've got Apple still holding up. It's still on a weekly buy signal, but certainly putting in a lower high recently. Then we've got Microsoft trying to hold the 380 level. And then we've got NVIDIA trying to hold the $110 level. If we break down below this week's low, then $100 would certainly be our next target to the downside. And that would be certainly a huge fire alarm if NVIDIA were to start to break down below $100. Now, Tesla has been on a weekly sell signal for a few weeks now. We're trying to hold the 250 level. We filled a gap. Now, our next mathematical target to the downside is 187.50. But if we look at this daily chart, you can see that there's a nice open gap with the bottom of it being at 218.72. So before we get down to the 187.50, we've got a couple of things to get through. First is the 218.72 level, and then of course there's going to be psychological support at the $200 level. And if Tesla were to break down below 200, that would certainly be a very big red flag for the overall stock market. Next up, let's take a look at the Canadian market. And to do that, we need to look at commodities. And unfortunately, crude oil continued to move lower this week. Our next target to the downside, if we take out last week's low, is 62.50. And you can see that is an important line in the sand, and certainly an area in which the market has turned around several times in the recent past. So if we get down to that point, we'll be looking for a reversal. Of course, it's going to be a really bad sign if we start breaking through 62.50. Now, on the other hand, natural gas prices continued to move higher this week. Our next mathematical target is 469 and then 547 with the stop at the $5 level if natural gas is going to continue to move higher here. Now, natural gas producers don't actually move that much in sync with the price of natural gas because they're heavily hedged. They've pre-sold their natural gas years in advance, and so they don't usually react to natural gas prices fluctuating that much. So just be aware of that. Now, we had an inside week for the price of gold. Last week was a bearish reversal week for the price of gold. So we had an inside week and we traded higher. So an inside week is a pause week. It's a week of indecision. We're still waiting to see which way the market wants to go next. If we punch through last week's high, then $3,000 would certainly be in reach, and that is a big psychological number for the price of gold. And then, of course, above that, our next mathematical target is 31.25. Now, like the S&P 500, the TSX 60 and the TSX itself both rolled over. They're both back on weekly sell signals as of Friday's close, joining small caps already on a sell signal. Micro caps had a wild week this week, and of course, the micro caps in the venture exchange have a totally different mix than micro caps in the U.S. market. The venture exchange is much more weighted in commodity stocks than the U.S. micro cap index is. So just be aware of that. That index held up very well this week. Then we've got bank stocks rolling over. They're back on a sell signal. We've got the financial index back on a weekly sell signal as well. No joy for energy stocks continuing to move lower. Gold stocks, on the other hand, are up at recent highs. If we break through 26.56, then 28.13 would be our next target to the upside on the weekly charts. And then just like in the US, technology stocks rolled over. Shopify is the second most valuable company in Canada, following the Royal Bank. Now, the Royal Bank has been on a weekly sell signal for a couple of weeks now. Now we have Shopify joining that group. And then we've got the TD Bank holding up fairly well at the moment. So there's the Royal Bank. It's been on a weekly sell signal for a couple of weeks now. There's a Shopify rolling over. There's the TD Bank back up at recent highs at 87.50. If we can take out those highs, then 90.63 would be our next target to the upside. No change for Enbridge, still on a weekly sell signal, no change there. Thompson making a new high for this move before pulling back slightly, still on a weekly buy signal. And then last up, we've got Brookfield. Brookfield was one of the worst performing stocks on the week and down sharply over 10% and back on a weekly sell signal as of Friday's close. Let's finish off looking at Bitcoin, which had an inside week, closing slightly higher on the week. No joy there, still trading below 100,000. And no joy for Ethereum, making a new low for this move and down over 3% on the week. Okay, folks, that is all for this weekend's presentation. We can see money fleeing the U.S. dollar. We'll have to watch closely to see if it also flees the bond market as well. Major stock market indices are not only on daily sell signals, but now weekly sell signals. And so, if you're a long term investor and you're concerned about what's going to happen next, this is the time and place where you take money off the table and you sit on your hands, or you can buy the bear ETFs and try to make money on the downside. The bear ETFs can be used in retirement accounts, so that is an additional option besides just sitting in cash. Enjoy the rest of your weekend. Next time you'll hear my voice is on Monday morning, and at that time we'll run through the most actively traded stocks from Friday's trading action.